Let's get in Kunal Shah. He's head research Nirmal Bang Commodities, and he joins us with his view on this space. Kunal, hi, welcome. On one side, you have seen a strong Chinese data in sense of GDP numbers after 2 quarters of decline. This one has actually seen some strength. And would you say that's the reason perhaps that we have seen the base metals run about?
Yes, we've seen a run-up last week after the Chinese copper imports number was surprising. Not just copper, even other metals imports were very much encouraging. Today we had this GDP data in line with expectation, nothing new. But at the same time, the retail sales data and the industrial production data was not as encouraging as the GDP report was. So we feel that this rally should not be sustainable going forward. 454, 455, good levels to go short in copper with a stop loss place above 458 and expect prices to decline in test levels of 448.
Kunal, we did see a knee-jerk reaction in the markets yesterday from the kind of news that was flowing in from US and of course the decline coming in for the dollar index, the Chinese officials downgrading US also. But today we haven't seen a follow-through buying coming in. So would you say that sustainability is a question mark here as well?
Well, what happened with gold was that overall there was a major short position built up in gold due to expectation that there's going to be a positive outcome which is going to come out of the meeting. And in spite of the positive outcome, we've seen dollar index declining. Most of the investors have shrugged off and unwinded their short position mainly on expectation that US GDP is going to get downgraded by at least 0.6% because of this shutdown which has taken place, and because of that the tapering will actually get delayed into 2014. The earlier expectation was that we are going to see a tapering in December. Now the expectation is that the tapering will be in somewhere in January or February in 2014, and because of that you've seen a major short covering. We expect some buying, some follow through to take place in gold even from present levels. $25 to $30 on COMEX, 1340, 1350 in gold looks very much possible, very much within the range. So we believe that one should go long in gold at 29,500, 590 with the stop loss placed below 29,400 and expect prices to test levels of 29,800.
Buying in precious metals, but what's your sense coming in for the energy space? Because this perhaps is a 5th straight week of decline coming in for that sector. There's no fundamental which is really supportive of that, except of course the Chinese numbers and the weakness in the US dollar. But having said that, how much are you confident of buying into this space?
Well, the way emerging markets are rallying, it is clearly giving one more indication that the energy prices are going to be much lower going forward. And markets are probably preempting those kind of move and rallying ahead of it. So we are bearish on crude oil, and we feel that even this $100 would not be sustainable. There is a psychological barrier of $100. I think it will be taken off. 96, 95 on the WTI looks very much possible within a very short span of time, maybe in a week or 2 weeks. So brace yourself for another round of selling in crude oil. I think among the entire commodity universe, looking at the way US oil production, the geopolitical tensions have eased, the Libyan production have resumed, it's a very strong case for selling in crude oil. So in spite of 5 weeks of constant decline, we are of the view that still there is more pain left for the crude oil, and one should go short at 6,200 with a stop loss place above 62.60 and expect prices to decline in test levels of 6090, 6050.
Fair point, Kunal. I appreciate you joining us with your strategies. We'll let you go at that. So that's the view really coming in from Nirmal Bang. Buying into gold but selling into copper and crude is how they would want to trade their day to day.